All right, good evening. Welcome to How to Use Charts to Quickly Analyze Any Stock or Market. My name is Tyler Ballhorn. I'm the founder of Stockscores.com. I'm going to talk to you for about 45 minutes on this pretty simple topic, how to use charts to analyze stocks. And you can take what you learned tonight and use it to analyze commodities, currencies, whatever. So the itinerary for this evening, first we're going to discuss why charts, what charts are and how we use them. I'll teach you what an inflection point is. Those are the building blocks that we will use in the 6 elements of chart patterns. We're going to put them all together to see some of the patterns that I use to trade stocks. Talk a little bit about time frame confirmation. I'll show you the Stockscores Education Center. We'll then talk a little bit about the training coming up in November. And finally, I'm going to analyze your stock. So if you have a stock that you would like me to discuss or look at, you can let me know the symbol and I will take a look at it for you. All right, this is my second time starting because I forgot to hit the start button the first time, so hopefully this is working okay. So let's begin. Why charts? Charts show us what people believe about the future. The stock market's job is to figure out what the market or investors believe a company is worth, and that's based on information. We have all this information coming to us, information about what companies do, information about politics, information about what's going on in the world. All of those things contribute to the value of stocks. And we can rely on the opinion of one person. So we could have some expert who says, Google is worth this much per share. Or we can rely on the opinion of millions of people trading with billions, if not trillions of dollars to tell us what things are worth. Now, I would rather trust the opinion of everyone than to trust the opinion of one person. To do that, you have to know the basics of how to read stock charts. The beauty of it is that once you learn that, it is simple and you can do it very quickly. I can analyze a stock, an ETF, a commodity, a currency, an overall market in 10 seconds or less using the things that I will teach you tonight. It takes some practice like anything. But once you do that, you really can have an edge that will help you to beat the market, whether you want to be a professional day trader or if your goal is simply to manage your retirement better so that you can retire earlier or in a better financial state. So let's take a look at a chart. This is a 3-year weekly chart of the S&P 500 ETF. You can see up in the top left-hand corner there the symbol SPY. This is as of today. It goes back 1,095 days. Each one of these bars here is called a candle. So that particular one that I circled was a week back in August. In that particular week, the price opened here and it closed there. That's what made the candle red. The fact that the candle closed below the open is why it was red. A candle will be green if it opens and then closes above where it opens. And so a short-term measure of supply and demand is if there's a lot of green candles in a row, the buyers are stronger. And if there's more red candles, then the sellers are stronger. Now this particular chart is a weekly chart. That means each one of these bars represents a week of trading. You can have 2-minute candles, you can have daily candles, you can have monthly candles. You can create a chart on just about any time frame. Now, in addition to the price action up at the top here, we also have volume. It shows how many shares of this ETF were traded on a weekly basis. So you can see the biggest week right here was when the market reversed its downward trend back in September of 2015. You can also see that we have the stock scores indicators at the bottom. The blue line is the signal stock score, and the green line is the sentiment stock score. We have some rules around those. We use the stock scores to help us pick position trades. Position trades are longer term trades, the kind of thing that you might put in your retirement portfolio. The general rule is you don't want to consider a stock unless it has a sentiment stock score, which is the green line, of greater than 60. And you can see that for the last, up until about a month ago, the sentiment stock score for the overall market was above 60. And in that time, the market did quite well. However, back here, when the sentiment stock score dropped below 60, you can also see that the market did quite poorly. So it's a useful indicator to keep us in the market when it's strong and keep us out of the market when it's weak. But now I want to switch gears a little bit and apply that basic chart reading to a much shorter time frame. This is the chart of an ETF called DUST. This goes up when gold goes down. It's a good way to profit when gold is moving lower. And it's one that I traded earlier this week when gold collapsed. Now this particular chart is a 15-day, 15-minute chart. And so although it looks a lot like the weekly chart that we were looking at a moment ago, this is actually just 15 minutes per bar. So that candle right there represents 15 minutes. That was the open. Today was Thursday. That's Wednesday. So on Tuesday morning, it opened up and then moved up through the day. That's when I bought it right there. And I bought it because it met some of my requirements. And you'll start to understand those requirements as we go through the presentation. But this chart hopefully drives home the idea that you can look at charts in many different time frames. If you want to be a short-term trader and hold things for 2 or 3 days, you would look at this chart, the 15-day, 15-minute chart. If you want to look at holding things for months or years, well, then you're going to look at a weekly chart, a much longer time frame. For the longer-term trades, again, you might do in your retirement portfolio. So how do we analyze these charts? Well, to do that, we need to understand this basic concept of inflection points. These are the building blocks of chart analysis. They represent the peaks and valleys on the chart, where stock price changes direction. So if you have stock price moving up, and then it stops going up and starts going down, you have created a peak right there, which we call an inflection point. And if price is going down and then stops going down, we have made a valley right there, which we also call an inflection point. This is an inflection point high. This is an inflection point low. And we're going to use these to connect the dots to build chart patterns. Because ultimately we can draw a line across the inflection points, and those lines tell us a lot about who's winning the war in the market. Are the buyers winning, or are the sellers winning? So if we move again to a chart, this is a chart, 240-day daily chart of Resolute Energy. I can highlight all of the inflection points just like this. And I can even go back here and highlight inflection point highs as well as inflection point lows. And eventually I'll be able to draw lines across them, and those lines will have some meaning. We'll talk about that in a moment. But for now, I just want everyone to understand that the first step to analyzing any chart is to identify the peaks and the valleys. Okay, so if it's a peak or a valley, you're going to put a little dot on it, a plus sign, whatever you like, and we're going to use those to do our analysis. Here is a 2-day, 2-minute chart, a very short-term chart of a stock that I traded today, LYB on the New York Stock Exchange. But again, at this point, let's just highlight the inflection point highs and lows. So there they are. Right? Any peak, any valley, just put a little dot on it. And we're going to use those in a minute to identify things about this chart and really what investors are doing with their money. Now we then take those inflection points and we draw lines across them to identify support, resistance, optimism, pessimism, price volatility. Abnormal activity is the one thing that we're going to do a little differently. So we're going to go back to those charts now, and I'm going to explain support, resistance, optimism, pessimism, price volatility, and abnormal activity. So to begin, support. If we begin with our inflection point lows, okay, those are the valleys, and we draw horizontal lines across them, we have defined what support is. Support is a lower price threshold that the market has created in the price action of the stock trading. What it means is that at that point in time, we use this one as an example, no one was willing to accept less than $6 a share for this company. The market was saying, based on all of the information that we have about this company's ability to make money in the future, we don't think that this stock is worth less than $6 a share. But at a later point in time, that threshold had moved up to $16 a share, and then to $21 a share. And if we go back in time, back in July, the threshold was only $3 a share. So as a company improves its business, as it gets better at making money, it will get its valuation adjusted by the market, because the company's over here, the market's over here, and all of this information is coming to the market from the company. And the job of investors is to figure out, what is that information worth? And in the act of buying and selling in the market every day, investors will determine what the company is worth. And as time passes, as the fundamentals get better or worse, the price of the stock will move up or down. All right, so that's support. Let's now talk about resistance. So if support is a floor price, then resistance is a ceiling price. We begin with the inflection point tops, and we draw a line across them. At this point in time, and really for many months, no one in the market was willing to pay more than $4 a share for this company, because they believed that the fundamentals were not worth more than $4 a share. And then the fundamentals started getting better, so people began to pay more. But they were unwilling to pay more than $8 a share. And then the fundamentals got better again, and so now they're willing to pay more than $8, but at a certain point, buyers said, we're not willing to pay more than $20. And that held up for about 2 or 3 weeks. And then the fundamentals, or at least the perception of fundamentals, got better again, and it moved up another step, and at that point, the ceiling price was $25. So you can see that we've had a series of steps up in value in this company as investors have got new information that justifies paying a higher price. So resistance is a ceiling price. It demonstrates the maximum price that investors are willing to pay for a company at a certain time. Now let's talk about optimism and pessimism. To begin, let me start by highlighting the inflection point lows and some inflection point highs. If the bottoms are rising from left to right, what that means is every time the market was a little bit weak, like it was there, or it was here, every time the market got a little bit weak, it was unable to push the stock as low as it had the previous time. The result is that we get rising bottoms on the chart. Every time the sellers show a little bit of strength and push price down, they can't push it down as much as they did the previous time. And that ends up creating these rising inflection points on the chart, which are a sign of optimism. So if you have inflection points that are rising from left to right, then you have optimism. Now it should be no surprise then that if you have tops falling from left to right, that you have pessimism. Now it's a little bit hard to see pessimism on this chart because the stock has done so well. But we had brief periods of pessimism here, here, and here when the tops, very short-term tops in this case, were falling from left to right. So rising bottoms equals optimism. Falling tops equals pessimism. Now the next thing I want to talk about, I'm going to do on the next chart. The next thing we want to look at is price volatility. How much is price changing over time? On this particular chart, we've got a lot of price volatility to start the day today. And remember, this in this case is a 2-day, 2-minute chart. This is the start of trading today, 6th of October, 9:30 a.m. Eastern Time. At the open, stock started at about 81.40, and in the first hour, it had risen to $83. There was a lot of price change there. Then price went down a little bit, and then it went up a little bit, and then it went down. But notice that each of those price swings was getting narrower and narrower. Now again, if we go back to inflection points, I can draw some inflection points like this. Those are the bottoms. I can also draw some inflection point tops like that. Let's draw a line across those. And notice that those two lines are converging toward one another in the shape of a triangle. What that means is that the volatility in this part of the triangle is much greater than the price volatility at that part of the triangle. Over time, volatility was diminishing. Anytime you have diminishing volatility over time, what you really have is investors coming to some consensus about what this company is worth. Even though this is a very short-term chart, the market had reached consensus that this stock was worth $82.40 as of 11:20 a.m. this morning. Now we can take the same method, apply it to a weekly chart, and come up with the same thing. You'll see these patterns of low volatility many different ways. Now, I'm going to show you some other periods of low volatility on this chart. And again, all I'm going to do is start with inflection point tops, inflection point bottoms, draw a line across them, and there I've got two lines converging toward one another. So I had low volatility there and I had a lot of volatility there. I can do it back over here. There is low volatility. I can do it here. There was low volatility. All right, so when you get volatility compressing, you get this low volatility situation. And the way you look at it is when there's a lot of volatility, you have uncertainty. And when you have very little volatility, you have confidence. Investors are confident that this price is the right price. Over here, there is no confidence. There's only uncertainty because there is a lot of volatility at that point. Now the final thing I want to talk about is abnormal activity. This is the sixth of our 6 elements. And for that, we're going to go back to our previous chart. So notice that this stock was trading pretty quietly. And then all of a sudden here, the price action got very strong to the upside. Notice also that the volume jumped up. Okay, this stock normally traded under 1 million shares a day, and then one day traded about 8 million shares a day. And the stock on that particular day had a huge price jump right there. That abnormal activity told you that investors had found some fundamental reason to pay more for this company. You don't have to know anything about this company. You have to know only that those who follow the company the closest, that know this company inside and out, were telling you on this day that there was something good happening at that company. Now let's put these all together. When you have situations where you have low volatility, optimism, breaking from low volatility, with abnormal activity, you often get strong upward trends because there's positive change in fundamentals there that drives price higher. Okay, we'll go over that in just a minute again. So when we put these together, what we want to look for are stocks that are breaking through resistance from low price volatility, from optimism, with abnormal activity. So we had that there, we had that there, we had that there, and we had that there. Okay, there's low, there, we have optimism, right? There was low volatility here, low volatility there, low volatility there, and really a long period of relative low volatility there. Abnormal action, abnormal action, abnormal action, abnormal action. I'm going to show you a tool tonight where you can search the market for stocks trading abnormally from low volatility. On this particular chart, we had low volatility and then a break. We had low volatility and then a break. We had low volatility and then a break. Okay, so as a day trader, you could buy it this one, you could buy it here, you could buy it here. The best one was this one. I missed that. I actually looked at it and decided to pass, but this one was too good to pass up. Stock went higher from there. That's a day trade. This is a position trade. This one you're holding this stock for 1, 2, 3 months. This one you're holding it for 3 hours. Now when we're doing our analysis, we can look at charts on weekly time frames, daily time frames, 15-minute, 2-minute. If you're looking at a weekly time frame, you're looking at investors. What are investors doing? If you're looking at a chart on a daily time frame, you're looking at more what we call position traders, people looking to be in and out within a month or two. When you're looking at a 15-minute time frame, you're looking at what swing traders are doing, those that are going to be in and out within a week or two. And when you look at a 2-minute time frame, you're looking at what traders are looking to do in the next hour or two. If you can get a chart that tells you to buy on a 2-minute time frame and a 15-minute and a daily and a weekly, what you've done is you've put all those groups of investors on your side. And so a nice thing to have when you're looking for trades to make is time frame confirmation. The quality of the trade improves when you have multiple time frames giving you the same message. Now in a few moments, I'm going to look at some symbols. So if you want to start thinking about some of the stocks that you want me to analyze, you can post the symbols. In the meantime, I'm going to quickly jump over to Stockscores. I've got another screen here that I'm going to drag in the Stockscores website. And I just told you I'm going to show you how you can scan for these things. So I'm going to go into the market scan on Stockscores. I'm just going to do something very simple. Let's look for stocks that had an abnormal day to the upside with abnormal volume and had low volatility as of yesterday. Very simple scan. We're also going to say it must trade at least 500 times a day. Run that report. It found for me 2 stocks that did those 3 things. And it did it very, very quickly. I can then look at the chart to see if it has the right kind of chart pattern. I don't particularly like this chart. I think it's good if you own it. This is called a cup and handle pattern. My reservation with it is that this has been trending higher for 8 months already, at least, maybe longer. So if you own this, I would stick with it. But otherwise, I would not be entering here to initiate a position. So this is the kind of analysis that I'll do with you at the end of the presentation. Before we do that, I've got a few other things to talk about. The Stockscores Education Center teaches you, just like I've taught you now, where I draw on charts and walk through the logic of different topics. It's an area found on the Stockscores website. So if you go into stockscores.com, go to education, we have the Getting Started area, which has got some videos for you to use to learn the very basics of analysis, how to use the Stockscores website, that sort of thing. We've then got foundation lessons, which teach you things like what I'm teaching you tonight, the 6 elements of chart patterns. There's a much more in-depth lesson on that over what we've done tonight, but it starts with inflection points and it talks about the 6 elements. Not only is there a written component, but there's also a video that you can watch. Okay, so there's a video that is about, I think, half an hour long. Then there's an assignment so that you can determine if you understand the concept. And then finally, there is a test where you can answer a series of multiple choice questions to make sure you understand that particular topic. Once you understand the theory in the foundation area, you can start to apply my strategies. If you are an investor, then you would apply the investor strategies. If you are a day or swing trader, you would learn and apply the day and swing trade strategies. Now there's multiple strategies because there's multiple market conditions. Right now, as a day trader, I'm doing mostly intraday pullbacks and superheroes. More intraday pullbacks than anything else. On that LYB, that was a superhero trade. But most of my trades these days are intraday pullbacks. If I was a swing trader, I'd be doing this one, Stockscores Simple Swing. But because the market's been in a sideways range in the last little while, I'm not doing a lot of these right now. When the market breaks out of that range, then I'll be doing these a lot more. Okay, and there's a lesson that explains how that strategy works, and there's a video that has me teach how it works. So all of that is in the Education Center on Stockscores. So we have different education options. Getting started is free. Foundation is just theory. You can buy your access to that. If you do the investor, you're going to learn the investor strategies plus the foundation. It's included. If you do the active trader course, you're going to learn the active trading strategies, but you also get access to the investor strategies and the foundation. And if you want me to teach you over a 4-month period with a weekly online meeting live, where you get to ask lots of questions and I show you all the intimate details of everything, then you can do the mentorship. The mentorship gives you access to all of these things, but it also gives you 4 months of one-on-one coaching from me. Actually, not one-on-one. Part of it's one-on-one, but it's also in a small group with these weekly meetings that are about an hour long. So you start by reading my book, then you do the foundation to learn the theory, and then you focus on the strategies, either investor strategies or active trading strategies, depending on what you like. In the foundation, we have written, video, assignment, and test. In the investor, in the actual strategies, we have a written and video for both the active trader and the investor. I will be doing this training again in November. For the investors, we will do nightly market scanning, where each night we will work through the different strategies using the Stockscores market scanner, and you will see me go through the analysis and draw lines on the chart so you can understand how I'm applying what you have been learning in the course material. If you want to take the active trader course, then you're going to watch me trade live. So I tell you what I buy, I tell you what I sell as I do it, real time, real market conditions, no benefit of hearsay or what has already happened. It's just live. As I trade, you see me walk through the process to identify these trades. There's no, it's all live and real, I guess is what I'm trying to get at. And then if you do the mentorship, that's going to start mid-November for each week for a month, outside of Christmas, because we'll have a little bit of time off at that time. But for 4 months of lessons, you will sit in on a webinar just like this, and I will teach you one of the concepts from the course material, and we'll work through from the very basic, if you know nothing, up to what you need to know to be able to make a career out of trading. And along the way, how to read charts, and along the way, how to do risk management and size your positions and use different charting programs to do the analysis. So at the end, my goal is to make you understand how to trade the market actively. Now I'm going to quickly post this poll. If you have any interest in these courses and want to get an email, then you can just answer the poll, and I'll leave that up for about 30 seconds or so. I don't bug people a lot. I'll just send you an email later in October with some more details about the class, and then you can decide at that point if it's something of interest to you. I'll leave that up for a moment. Now, after we've done the poll, what I'm going to do is analyze some stocks for you, and we'll wrap it up. So tonight's webinar a little shorter than normal. Usually we go about an hour. This one tends to be about 45 minutes long. So, okay. Just while I'm waiting for the poll to finish, Stockscores is being rebuilt right now. It's going to soon work on your iPad, your iPhone, or Samsung phone, an Android phone, whatever. So it's going to be, touch compliant and all that kind of stuff. So it's been under construction for way too long, 4 or 5 months. So soon we'll launch that, and all the tools are going to be the same, but it'll just be a lot more, it's called responsive design, so it works on mobile devices. Okay, so let me close the poll. Thanks for answering. And again, don't expect an email from me tomorrow. It'll be later in October once I've figured out all the details. Okay, so there is my contact information. It's going to come up on the screen in just a second. Should come up on the screen now. Hold on. In a moment. Good. So there's my contact information, my email address. That's my personal email if you want to ask me any questions about the upcoming courses, that sort of thing, you can sign up there. Now, again, the courses are in November, but a lot of people want to have a little more time to work through the material. You'll get more out of the live training when I do it in November if you've had some time to look through the material. So you can sign up for the course tomorrow if you want at the stockscores.com/learn page. There's a bunch of videos on there that explain more about the courses. I didn't want to go into a lot of that detail tonight, so if you want to learn more about what the courses are all about, go there. Not a lot of information about mentorship there yet, but basically the mentorship is the active trader course, the investor course, the foundation course, plus 4 months of live weekly coaching sessions. So you'll get 15 or 16 one-hour classes over the course of 4 months. Okay? All right, so I promised that we would look at some charts. We're going to do that in just a moment. Just bear with me here. Okay. So let's look at some charts. We have a few, well, lots of symbols being posted, so I probably won't get to all of them because there's quite a few people in here and there's a lot of questions, but I'll do my best. So we're going to start with MMDO. Now, I'm going to analyze these based on the daily chart. If you were looking for it as a different time frame, then let me know. And I'm going to try to use a little tool I have. I hope this works. No, it's not working. Yeah, how can I fix this problem? I can't really. I have a tool that allows me to draw on these charts, but unfortunately, because I've got my computer hooked up to all these other screens, it screws up the zooming. So what I'm going to do is just sort of walk you through, well, I'll use something else called Snag It. So let me just do this. I'm going to just snag this chart. This is a little more work, but I'll do this for a few charts here just to demonstrate some things. Okay, so MNDO is the stock. And all right, so we draw a line across the inflection point tops, draw a line across the inflection point bottoms. We have what's called a pennant pattern. The tops on this chart are falling over time. That means we have pessimism. We have a little bit of rising bottoms in the last little while. That means some optimism. But generally, I don't think this stock has showing great potential yet. Showed a little bit of life back here, but it's still got a lot of resistance to work through. I like the pennant that's building. If it can break out of this pennant to the upside, then I like it better. I think it's, at this point, maybe a 6 out of 10. If it can break through 225, I'd up my rating to a 7 out of 10. Okay, next chart is PBH. Okay, so do we have rising bottoms or falling tops in this chart? Well, see there, we've got a peak here, an inflection point top, and another one there, another one there, another one there. So right now the tops are falling. That is a pessimistic chart. Therefore, it is not a stock I'd want to own. Looking at a 3-year chart, it had an upward trend, which was broken in September, early in September. It broke that upward trend after a falling top. So another reason for me to not really like this chart. Doesn't look terrible, but I certainly wouldn't buy it here because that upward trend has been broken. Okay, next one is T.M. So for Canadian symbols, we have to put a prefix, but that symbol is not coming up. So sorry, I don't know what M is on Toronto. So I'll move to the next one, COP. Okay, this is ConocoPhillips. First thought is I'm starting to like this. It's broken its downward trend line right here. Let me take a look at the 3-year. So on the 3-year, it's been in a real nasty downward trend, but it actually broke that downward trend last week. So that's a pretty good sign. Made a little double bottom there. This looks like a lot of energy stocks. I think this is good. I don't think it's great. You can see the sentiment score is 48, so it's still not above 60. It seems to me like a stock that's in the early stage of a turnaround. I think it's going to come up into that $48, $49 level and get stuck. It then goes sideways for a few weeks and can break out up through 50, then it would be something I like. But as a position trade, I don't really like it yet, but it's getting there. Let's take a look at AEG. So I'm going to look at this on a 3-year time frame again. So who's winning the war here? Is this stock optimistic or pessimistic? Well, to answer that, we look at the inflection point tops, and you should see that they are falling over time. So there's an inflection point top. There's another one. There's another one. See how they're falling over time? That means the sellers are in control. Therefore, there is no reason to want to own this stock right now. Until it can break that downward trend, I want you to avoid this stock. Okay, next one. BBL. Okay, so I'm going to make this a 3-year because I want to look at the big picture on these. And this one I like. It had been in a pretty brutal downward trend for over a year. It broke the downward trend there, then went sideways building, look at that, rising bottoms. What do rising bottoms mean? That means optimism. So it's building optimism, and then last week it broke through this price peak here. This is what I call a bottom fishing pattern. It was in a downward trend, it broke the downward trend, step 1. It built rising bottom, step 2, and it broke to the upside from a rising bottom. I like this as a longer term trade. You know, the kind of trade you would hold for months. BBL. Notice also that the sentiment stock score, Notice also that the sentiment stock score is above 70 or above 60 right now. Moved up above 60 in July, and since that time it's been slowly working its way higher. So it's a very useful indicator for that longer term style of trading. Okay, I'm going to go through these a little faster. I kind of wanted to show you how to analyze first. Now I'll just tell you if I like it or not. So first thought is it looks pretty good. This is OCN. It's not bad. It's got a lot of work to do to chew through all this overhead resistance, but it does look like it's turning the corner after being pretty ugly, breaking from a little rising bottom here. Notice the stock scores are better. So I think that's a 7 out of 10. This is a Canadian stock. Canadian stock, notice up here where I'm entering the symbol, I put T dot and then the symbol. This is PenWest, PWT. Okay, bottoms are rising, so the buyers are in control. It's a good hold at least. See, the stock scores are in good shape. Let's take a look at the 3-year chart. 3-year chart, it's probably going to get stuck at 3. I think your time to buy this was probably 8 weeks ago when it first broke from its rising bottom after breaking the downward trend. To me now, it's a little late to chase it. It shows up more clearly on the daily chart. There was that break in August, and it's already gone up quite a bit since then. But if you own it, I would definitely continue to hold it. It's looking like a good hold. Okay, HLX. HLX I like. I think this is a good longer-term position trade. Breaking, it's a similar thing we've talked about. Downward trend, broke the downward trend, built a rising bottom, now starting to break from a rising bottom. I like that stock. Ballard Power? Yep, T.BLD. Ballard Power also trades in the U.S. with the symbol BLDP, but I'll show the Canadian listing. And it looks pretty good. It's turning around. You can see it made a break. I think it's a little late to buy it now. It kind of started that move back in the summertime. It's going to get stuck at 3.5, so look for it to rise up to 3.5 and stall. But I do like it if you already own it. I don't think I'd initiate a position here. V.APH. Very strong upward momentum. Had a big, what it seems to me like they probably had news today, and it's the old story, buy on rumor, sell on news. So when did this stock start its upward trend? Well, it broke from what's called a cup and handle pattern with abnormal activity right there. So there's your low volatility, stock scores above 60, above 80, good volume relative to previous volume. So that was the start of the upward trend. Great time to buy. Definitely do not want to buy it here. And in fact, I'd be really thinking about selling it because it's broken this upward trend. It hit a new high and closed way below its open on a day when it traded huge volume. This is what I call a bursting bubble. Okay, very steep upward trend, open strong, closed weak. I think I'd be looking to sell this one. And maybe you can buy it back because it may, start up again. But for now, I think party's over. Silver Wheaton. I don't like precious metals right now. I think that they're a sell. You could see it bounce back a little bit in the short term, maybe come up into 34 and then roll over. But ultimately, here's the problem. That long-term upward trend was broken early this week on Tuesday. And so I would not want to own this stock or just about any gold or silver stock right now. SBLK. So I'm just applying those things that I taught you tonight. I'm doing it sort of quickly in my head. I think this is a hold, not a buy, not a sell either. I don't really see a reason to own it. It's got some resistance to deal with, but it does seem to be turning around slowly. I just think it's going to be a bit of a waiting game. I'd like to see it get through this resistance at 540 before I got too excited about it. I'm going to have to move a little faster here. Okay, so this had a big abnormal day. Not a great pattern. Let's take a look at the 3-year. Still in a downward trend. I think this is encouraging, but I think it needs some more time to build some optimism. So I would not buy that yet. This is a relatively new listing. The time to buy was 4 days ago when it made its abnormal move, abnormal price, abnormal volume from sideways trading. I don't think you want to initiate a position here. Maybe consider it on a pullback, but I would not buy a position tomorrow because it looks like it's going to make a pullback. I'm going to start to hammer through these a little faster if I can. I would not do anything on this. Looks okay. Just don't see a reason to buy it. I would avoid this one. This is CTSH. Sellers are in control. No reason to buy it. Looks pretty ugly overall. I would stay clear of this. This is a good hold. Don't think it's a buy right now. That's not bad. I think it's more of a hold, though. It's going to encounter a little bit of resistance at this old inflection point high, but it's doing the right thing. It's building rising bottoms instead of falling tops. So I think if you own this, stick with it. Don't see a great reason to buy it here. Mosaic Capital, this is listed on the TSX Venture. So you have to put a V dot in front of the symbol. I like this. Downward trend, broke the downward trend, built a rising bottom, breaking from a rising bottom. Issue with this stock is it's very illiquid. Only traded 16 times today. So you can't take big positions in it. If you want to sell, you might have to phone your neighbor and see if they'll buy it off you. Did I look at this one already? No. Another one that I think is due for a pullback. The trend went parabolic. So when I say parabolic, that means it ran away from the trend line. So went parabolic, opened strong, closed weak. I think it's going to pull back to the trend line, probably get down into the 180 mark. At that point, it might be worth considering. It's basically doing what it did back here. Okay, so there it went parabolic, and then it pulls back to the trend. And then it ran up, pulls back to the trend. Ran up, now it looks like it's going to pull back to the trend. Not a bad chart, but I think short term it probably gets weaker before it gets stronger. T.FTS. So we'll do 3 more. Fortis. Short term, it's got falling tops. Let's take a look at the long term. Don't love it. I think I would stay clear of this one right now. It's built a falling top in the last 3 or 4 weeks. It doesn't look terrible, but the stock has done really well over the last 3 years. And it just looks like it's going to take a little bit of a break for a while, kind of like what it did here, where it drifts a little bit lower maybe, or sideways at best. So I don't think I would want to take a position in it now. I did this one already. Sorry, some of you asked me about the same stock, so I'm pulling them up more than once. AMRS. I'm trying my best to get everyone's done, but there's so many coming through, it's a little hard to keep track of them all. So this is turning around. It's been ugly. Now starting to turn up again, building some optimism. Let's take a look at the 3-year. In the grand scheme of things, it's still well below that long-term downward trend line. So it's got some hope, but I think it's hope, and that's about all right now. It would be highly speculative money that you want to put into that. Don't Don't take too much risk on it. Okay, this recently broke an upward trend. So 3-year, there was the upward trend, broke that about 8 weeks ago, now turning lower. I think you want to stay out of this one. Look at the sentiment stock score, 32. Incidentally, the signal stock score we use also, that helps us to see stocks that are behaving abnormally. So if I take a look at REN, for example, when they start to behave abnormally, the sentiment line will be above 60 if there's optimism, and the signal line will spike up above 80 if there's that abnormal behavior. So there was 60-80, that abnormal day. Here, abnormal, 60-80. There, abnormal break, and above 80 again. So that's how you use the stock scores. If we take a look at LYB today, okay, it made that break, but it doesn't have as good of a chart pattern, so it's not jumping up above 80 because it's still got all this resistance to deal with. It's starting to build optimism. That's why the sentiment score is, what is it? Yeah, just above 60 right now. But it's not as strong of a chart because it's not making a break out of a good pattern. So when I created the stock scores, that's how I did it. It basically took elements of chart patterns, things like optimism, pessimism, price volatility, abnormal activity, all those things that I talked about tonight. Those get scores in the stock scores algorithm, and we add up the points to give you these sentiment and signal stock scores. So really, when you're looking at the stock scores, you're taking what I taught you tonight and putting it into one score overall. All right, so that is my presentation for tonight. I will wrap it up there. There is my contact information. TylerB@stockscores.com is my email address. Follow me on Twitter. I put out lots of little tidbits on Twitter @Stockscores. Also, subscribe to my YouTube channel. I put out at least one video every week. They're free, and you can see those videos. I'm going to try to post tonight's video on YouTube as well, and I'll send out a link to everyone that was registered. I want to thank you all for joining me tonight. Sorry about the little false start that we had, and I'll get that video uploaded as soon as I can, and we'll see you next time. We'll have some more webinars coming up through October and November. Have a great night and trade well.